The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. Investing involves risk, including loss of principal. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. People of Chicago, you're tuned into In the Know Radio, a show about money, investing, retirement, and life with your hosts, Craig and Leslie Bolanos, co-founders of Wealth Management Group.
It's time, America. Get your game face on.
Put your savings to work and finance the lifestyle you want with real advice from real people.
You're emotionally tied to your money.
Separate the confusion from the facts to get prepared for whatever comes your way and get it right here.
You got to make sure you've got plans for a rainy day.
What's the number you need to live out your retirement dreams?
$60 billion.
Holy cow!
Wait, did Leslie really just say $60 billion? All you need to know is that Wealth Management Group is in the financial planning business, so you can be in the fun and retirement business. So get your retirement on, people. Their phone lines are always open at 833-WMG-PLAN. Now, here's Craig and Leslie.
Hey, we come to you every Sunday because we want to help you not just get retired, we want you to stay retired. And that means getting empowered with sincere, actionable ideas that you can use to improve the lives of yourself and your loved ones financially. When you've got questions, we have the answers. Give us a call, 833-964-PLAN. That's 833-964-PLAN, or check us out on the web, getretiredandstayretired.com. That's getretiredandstayretired.com. Well, listen, I got to tell you, if you didn't believe in the soft landing scenario of this economy, if you didn't believe in the story of this bull market, you have to be a believer by now. There is no doubt. Sure, maybe it got a little bit rocky this week in certain parts of the market. I mean, after all, you've got jobs reports and other things that have occurred, but the reality is the trend is your friend. And what does it mean when markets are trading at all-time highs? What does it mean when cryptocurrency is soaring? What does it mean with a change in administration? We're going to unpack all of this and more throughout the show. But something that is newsworthy, and because it's newsworthy, it deserves to get discussed, is everyone has seen literally the meteoric rise in virtual currencies since the election. And let's understand a little bit about what that means, a little bit about what it is, and a little bit about how someone can participate if they want to do so intelligently. Now, the reality is virtual currencies or cryptocurrencies, these are not new. They have been around for quite some time. But the reason they're so in the news today and why they're more newsworthy is the fear of larger oppressive regulation is starting to abate, because we have an administration who is viewed as being virtual currency friendly. And then that leads into the discussion. The granddaddy of them all is Bitcoin. And people say, again, what's Bitcoin? Everybody kind of knows, but do we really? Bitcoin is the first, this is my editorial, it's the first form of internet native money. That's what I said, internet native money. That's what Bitcoin is. And it's gained global adoption. I mean, Bitcoin now by de facto kind of becomes the world's largest cryptocurrency. I didn't say reserve currency. That's the US dollar. I said the world's largest cryptocurrency. And Bitcoin transactions, they're sent using blockchain technology. And blockchain technology allows the transaction to be sent between two parties without requiring a financial intermediary, in this case, what's normally a bank. So that blockchain technology is what essentially allows Bitcoin, the digital currency, to be global, to have a fixed supply, to be transparent. And the question is, Should someone participate? Yeah, that's a very personal decision. It's kind of like saying, should someone own gold or silver? Should someone own stocks or bonds? Should someone own real estate? Should someone own this or that? I think you need to have an idea as to whether you're going to be a trader of digital currency, whether you want to be an investor of digital currency, or do you view digital currency as a storage of value? And for those who view digital currency as a storage of value, in a similar way to how people view gold as a long term storage of value, well, let's talk about how to participate. You could, of course, go and do an online hosted wallet, hot storage. You could, again, go and do cold storage, or you could find a very easy path by getting involved in one of the exchange traded products, in this case, an exchange traded fund that's going to track the price of a digital currency like Bitcoin. And when I think about what the advantage of these ETFs are, is number one, it gives people the access through the very convenient wrapper of an exchange traded product. And you know what that does? It helps remove the operational, the tax, the custody complexities of needing to hold Bitcoin directly. Number two, I think participating in one of the exchange traded products that tracks the price of Bitcoin, you get liquidity. I mean, again, liquidity is if you participate in one of the exchange traded products, one of the largest ones, you're going to have intraday liquidity. And when you have that, it's going to potentially give investors lower transaction cost. And that's important. Third, beyond access, beyond liquidity, using an exchange traded product to participate in the spot price of a cryptocurrency like Bitcoin is, I think it's about integrated technology. Because when you can partner with one of the world's largest asset managers, someone who has a proven technology integration, who actually has the exchange traded product backed by the actual Bitcoins, well, I think it's a good solution. So here's my point. If you're wanting to learn more about all things digital currency, you're wanting to learn more not because you want to be a trader, not because you want to be an investor, but you want to be an investor who maybe has an eye on using cryptocurrency as a diversification tool, as a long-term storage of value, in the same way you view things like gold and silver, well, then I want you to pick up the phone and give us a call. We can be reached at 833-964-PLAN. That's 833-964-PLAN. And we'll be sure to share with you the risks, the return parameters, and what some of the ways for best execution might be if you want to be a longer term investor for a storage of value in an exchange traded product. And maybe it should be an exchange traded product that just tracks the world's global currency right now that appears to be Bitcoin. You can also learn a lot more. Go out to our website, Get Retired and Stay Retired. That's Get Retired, Stay Retired. Now, I think if someone's going to be adopting and making a asset allocation decision into Bitcoin or some form of a digital currency, you don't want to be willy-nilly about it, right? You deserve to know what your risk budget is. The risk budget is very different than risk tolerance. Risk tolerance is how we feel. That's the emotional dynamics of money. Risk budget is what dollar amount, or said another way, what percentage of my investable assets can and could be, or can, could, and should be in a alternative investment like digital currency. And you know how you figure that out? You figure that out by doing financial planning and financial modeling, because the best investments come with a financial plan. Because again, we talk all the time that it's not enough to accumulate a nest egg. You've got to determine how that nest egg is going to help you cash flow in retirement, because you can't spend a balance, but you can spend cash flow. You need to make sure that every decision you ever make is made with an eye on your personal income tax return. So it's very important you understand how digital currencies are taxed, and make sure you specifically understand the taxation of a digital currency in the convenience of an exchange traded product, an ETF wrapper that gives you the access, liquidity, and integrated tech. So I think you want to learn more. You definitely can. Pick up the phone and call us 833-964-PLAN, 833-964-PLAN. Check out our website, Get Retired, Stay Retired, GetRetiredStayRetired.com. I'm Craig Bolanos. You're listening to In the Know on AM 560 The Answer. We're going to pay a couple of bills with this commercial break, and we'll be right back helping you with some sincere and actionable ideas that are tested in the trenches. Stay tuned.
With Craig and Leslie Bolanos, where their goal is to pummel you with financial know-how until you say uncle.
All right, so let's talk about it. You know, your retirement shouldn't care about volatility. Let me say it again. Your retirement shouldn't care about volatility. I mean, let's be clear. Being retired, staying retired, isn't about chasing the market and aiming for ginormous wins. Everybody likes to win, but you can't be swinging for the fences. Retirement's about ensuring you have the income to cover your expenses. Your expenses not just being your needs, but also covering your wants. You got to have both. I mean, travel and leisure, meals and entertainment. Those are things that I want and I enjoy. And when you get to that point that your financial plan generates that steady income without depending on the ups and downs of the market, then the market fluctuations don't stress you out. And let's drive into why that approach is essential for long-term retirement security. I mean, listen, market volatility, if you're relying just on capital appreciation, that leaves a retiree incredibly vulnerable to financial instability. You know, when we talk about those three pillars of retirement income, remember with me what pillar number 2 is. Pillar number 2 is generating sufficient portfolio income, that's dividends, interest, and payments, in order to support your monthly cash flow need. If you're simply invested in the S&P 500, or you're simply invested in a basket of growth stocks and you don't have the cash flow, then you're reliant upon perpetual enduring bull markets to make this thing work. And that's just not the norm. I mean, the arc of life is dynamic and you can get whipsawed pretty quick. You know, part number 2 is, you know, people always talk about risk and return. We spend a lot of time talking about the sequence of return risk, because you have to make sure that if you're investing primarily for appreciation, you gotta have a game plan to make sure you don't draw down your savings during a market decline. Because if you've got to be systematically selling shares, systematically taking distributions pro rata from a 401k plan, where some of the money's coming from stocks, some of it's coming from bonds. God forbid you're making pro rata redemptions from a target date fund or a balanced fund, then you're inadvertently, during periods of temporary declines, going to be selling shares of stock when prices are low, which means there's no way for your portfolio to ever recover. Number three, we're talking about why your retirement shouldn't care about volatility. You gotta have a stable income focus. That means a strategy that also has some safeguards, some bumper guards in there, because again, sometimes tail risk and black swan events can and do happen. Speaking of that, what about your longevity risk? Everyone's single biggest fear is running out of money. And the reason people run out of money is inflation. I'm mad. Hell, I'm pissed. A lot of the things that I consume cost 30% more than they used to. In fact, you want to know what else I'm mad about? I'm mad about my Cook County property tax bill. When every time I wonder why my home's not gaining and appreciating value like other parts of the country, all I do is I go, oh, I get it, because my value is being eroded by my high property tax bill base. Okay, that's an example of inflation. If you're going to be retired in the same home that you're in right now, and your retirement's going to last 20, 25, 30 years, look at your property tax bill 20 years ago for the property that you're currently in. Has that property tax bill more than doubled? You bet it has. So do you have a plan in your portfolio to grow your capital base over time, which in turn allows you to grow your income over time so that you can outpace inflation? But you do all these things. We're talking about why your retirement shouldn't care about volatility. You also have to have preparedness and flexibility. You can't afford to lock yourself into long-term solutions with all of your money that don't give you the optionality. You need optionality. You need off-ramps because things change. Economies change. Markets change. Personal circumstances can, will, and definitively do change. And of course, tax efficiency. Tax efficiency, tax efficiency, tax efficiency. We talk on this radio show all the time that it's the optimization. Start with the income taxes first, reverse engineer everything from that, because a well-structured retirement income plan helps minimize your taxes, which in turn preserves more of your wealth for both essential and what I love, discretionary spending. You want to know what discretionary spending is? Discretionary spending is everything that you buy that you don't necessarily need, you just want it. And you know who does discretionary spending better than anybody on the planet? We do. America does. Who invented the shopping mall? We did. Who invented online retailing? We did. Who invented the credit card? We did. Who invented the value meal? We did. Who supersized the value meal? We did. Think of everything that we create. It's all created because there's insatiable consumer demand. Why? Because free men and free women in a society that have free markets and practice capitalism have the opportunity to grow and build and sustain wealth in a way that citizens of other countries are envious of. So here's what we got to think about. How are you going to create this predictable income stream that's going to not just satisfy your needs, one that's going to satisfy your wants? And how are you going to create that stream in such a way that you don't spend the time worrying about market volatility and what the next jobs report is going to be? And how do you ensure that that's integrated with your tax plan, your retiree health care, your estate plan? Because if you have people that you love and they love you back, then you have a responsibility not just to be in a position of advocacy for yourself, but you have to be in a position to advocate for those that you love if something happens to you in the future. And all of that are things that we do, and we do them well. So let's get in touch. Let's take control. Let's seize not the day. Let's seize tomorrow for a brighter future. Pick up the phone and give us a call. 833-964-PLAN. That's 833-964-PLAN. Connect with us online. GetRetiredStayRetired.com. GetRetiredStayRetired.com. Heck, if you spell it Get Retired and StayRetired.com, that'll lead you to the same place. And I use that tagline because we understand what it's about. We understand that you need freedom from worry. You need peace of mind. Because when we evolve strategies that lead to financial peace, then we can be more present and we can pursue life with less worry. Be there for our spouse, our kids, and be there for ourselves. Hell, I love pickleball. I'm not ashamed to say it. Maybe you do too. That takes money, and the way ultimately it's about owning your time. And if you want to own your time, that concept of time, the currency that is time, that means we need to help you get retired so that you can start pursuing your passions. 833-964-PLAN, 833-964-PLAN. Connect with us online again. GetRetiredStayRetired.com. GetRetiredStayRetired.com. So listen, consumers are continuing to say, long live the bull market. I mean, absolutely. Have you seen the share prices of companies like Walmart lately? Have you seen the spending that's happening? I mean, on Black Friday and on Cyber Monday, I'm pretty sure, unless I'm misreading the numbers, we smashed all the records. And you know what? We didn't smash the records just because things cost more money. Obviously, they do. We smashed the records because inflation adjusted. The spending per capita, the spending per person was more than it was the previous year. You know what that tells me? That tells me people are confident as they look forward in the economy. People are more confident now than they might have been in what their personal position's going to be, or as a result of what this economy might be in the future. So when I look at history, if history's my guide, and it's the only guide I have, November was a fantastic month for the S&P 500. We've seen the broad-based stock markets hit new highs. And you know what? New highs tend to make new highs. The trend is your friend. And remember, don't fight the Fed. And guess what? Those recipes get us to a place today where things aren't too hot. They're most certainly not too cold. They feel just about right. So make sure you're in a position to win. And we're here to walk alongside each and every one of you who wants some help to win on that mission to get retired and stay retired. So 833-964-PLAN, 833-964-PLAN. Get retired, StayRetired.com. More to come after this commercial break. In the Know, Craig Bolanos, AM 560, The Answer.
Want more In the Know radio? You want more In the Know radio? You can't handle more In the Know radio. Yeah, you can. Welcome back. Here's more with Craig and Leslie.
Well, last time I checked, it's winter in Chicago. It got cold this week. And with winter means it's the end of the year. And we're not just talking the holidays. We're not just talking Santa Claus. We're talking about year-end items that you got to do because they matter for your taxes. What's first on my list? If you haven't done it by now, it's getting late. If you are 73 or older, I really hope you've processed your RMDs, your required minimum distributions. Why do I hope you've gotten them done? Simple. The penalty for not taking them is no longer 50%. The penalty is 25%. Now, why do I mention that? That sounds like good news. Smaller penalty if you screw up than it used to be? No, it's terrible news. See, because if you made a mistake in the past, they kind of gave you a hall pass. You make a mistake now, Oh, no, no, no. They are going to enforce that 25% penalty. That puts your IRA, your 401k in the penalty box. Don't let it be you. So if you have required minimum distributions that you need to take because you are 73, get them and get them done now. Part number two, in that same way, if you've inherited a retirement account prior to the Secure Act being passed, oh, it's glorious. You're stretching everything. If you've inherited a retirement account from a non spouse since the Secure Act, you're subject to a whole different set of rules. And if you're not meeting your required minimum distribution from that inherited IRA, you're up the creek without a paddle, or other euphemisms I could go ahead and use. So if you need some help with those RMDs, get in touch with us. GetRetiredStayRetired.com. Let's get through the clutter and the confusion and get you on the path you need. Next thing, you can't get a loan for retirement. We've got to pay ourselves first. Everybody knows that. But 'tis the season to max out your retirement plan contributions. So let's top off those 401ks, top off those 403bs. Let's get your IRAs funded, whether we're doing deductible IRAs, non-deductible IRAs, Roth IRAs, backdoor Roth IRAs. There's a myriad of strategies, but let's make sure we're getting funded. Because again, no one's giving us a loan for retirement. It's us against us. And sometimes we just got to move us out of the way to have better discernible action. We're talking about just some year-end items. After all, going into the second week of December now. So the other big thing is 'tis the season where you have to say convert or not to convert. And I'm not talking about religion. I'm talking about traditional retirement accounts being converted to Roth IRAs. Now, I think everyone knows the Tax Cut and Jobs Act is likely not going to expire. That means many Americans are going to enjoy the lower marginal tax rates that they currently have in place. But we have to talk about bracketology. And what I mean by bracketology is if you're in the 10%, 12%, 22, 24% marginal tax bracket, any of those, you are primed to discuss Roth IRA conversions. But I want to make sure you do it in a bespoke manner. And you know what that means? We need to understand exactly where your income is year to date. That's your income from work, active income, your income from passive activities, passive income, rent, real estate. We need to make sure we understand exactly where you're at in terms of portfolio income. Essentially, what we need to do is we need to create a hypothetical tax return, a pro forma. And given we're in December, it's very easy now to calculate what your total income looks like for 2024. And once we know your total income, then we can take a look at whether you're going to be itemizing or whether you're going to take the standard deduction. And then based on that, we can make a recommendation as to what you might want to convert or not convert without jumping to the next marginal tax bracket, without being disenfranchised from another credit or a deduction, without inadvertently subjecting yourself to increased Medicare premiums. That's the level of due diligence and care that's needed for Roth conversions. And if you want some assistance, you want to learn more, you can. 833-964-PLAN, 833-964-PLAN. Check us out on the web, GetRetiredStayRetired.com. That's GetRetiredStayRetired.com. You know, the other thing I think you got to think about is optimizing those charitable contributions. I was visiting with a client this week in California, and the question, of course, came up. Are we going to write checks, or is there a better way than writing checks to the charity of our choice? And what we discussed is the pecking order. If the client is 70 and a half or older, we know that we're starting with qualified charitable distributions where you make the donation directly from your IRA. Of course, the benefit in doing that is you're removing money from the IRA, not paying taxes on it because it's going straight to a charity. You're lowering your future RMDs and you're protecting your after-tax or tax-free accounts. But if you're not 70 and a half, then the next thing you're looking at is, do I want to donate appreciated stock? And the advantage of donating appreciating stock, of course, is, hey, if we've held the stock for 12 months and a day, we get to deduct the fair market value of the stock because presumably the stock has gone up in value for a good investor. If we were to sell it on our own, we would pay a capital gains tax. If we donate that stock or security that's appreciated in kind to the charity, we avoid the capital gains tax and we get the full tax deduction. I call that leverage. It's capital gains tax avoidance with a deductible transaction on the return. And then for others, maybe we want to do something even better. Maybe we want to create a donor advised fund where we can transfer or donate appreciated securities and assets to our donor advised fund, get our upfront tax deduction, avoid the capital gains tax, but give us a mechanism to pay the money out to charities of our choice over time. Wow, that's tremendous flexibility, tremendous optionality. So as you come into the year and you really start thinking about those charitable endeavors, ask yourself, am I doing the right thing, donating from the right account? Should I be doing qualified charitable distributions? Should I be transferring appreciated securities in kind? Should I or shouldn't I have a donor advised fund? Those are all things that we can help you out with, and you already know how you can learn more. Check us out online at getretiredstayretired.com. That's getretiredstayretired.com. Connect with me via phone, 833-964-PLAN, 833-964-PLAN. And a final word of year-end items. Health savings accounts remain the Swiss Army knife of financial vehicles. Tax-deductible contributions, tax-deferred growth, tax-free distributions. So maybe during open enrollment this year, we should be looking to match our health care with a health savings account if we're a lower consumer of healthcare, so that over a series of years, we can build up a preordained bucket of money that can be used to offset our future retiree healthcare costs, all in a triple tax preferenced account. Want to learn more? You can. 833-964-PLAN. Check us out online. GetRetiredStayRetired.com. You're listening to In the Know with Craig Bolanos on your favorite station, the station with all the answers, AM 560, The Answer.
Good, because Craig and Leslie are back, and they're about to crack some eggs of retirement knowledge all over Chicago. Back to In the Know Radio.
Let's talk about an investment idea again. Everyone's familiar with stocks. People are familiar with bonds. Those are very, very common tools. But what about this little security that sits in between? I call it preferred stock or preferred securities. And you know what? Preferred securities are off to a solid start again. And preferred securities can be a higher yielding alternative to traditional fixed income options. So in general, preferreds, as we call them, offer generous yields, both absolute and after tax, and their higher income stream serves as a total return buffer against VIX or volatility. And as such, we look at these higher yielding securities, preferreds, as a complement to traditional fixed income investors, right? It's a good spot to be in the market. So here's some other things I think people should know, because we've talked about these a couple of times, and I'm excited that people have wanted to search out more information. So again, preferred securities, they're a hybrid. They could be classified as either equity, they could be classified as debt within a company's capital structure, but they're always going to be senior to common stock, always going to be junior to the traditional bond. And as such, they don't have the same capital appreciation potential as common stock, but nor do they possess the same preservation benefits of a bond. But there's a reason to have something different, something that sits in between. These preferreds, they have a financial focus. The majority of issuance comes from financial institutions. And in case you haven't noticed, there's an administration here who is freeing up the bureaucracy, freeing up the red tape that's going to make it more profitable for financial institutions to operate in this country. That's good for preferreds. On the credit risk side, you need to understand where these sit. The majority of them tend to be in that triple B space or so. So I kind of view them as a high yield fixed income alternative. Next, there's multiple markets for preferreds. You've got the retail preferreds. Those are the ones at the $25 par value. Those typically have a longer duration. That's an interest rate play. Then you've got the institutional preferreds. Those are what I call not the 25s at par, they're the $1,000. And those are going to have better quality, but they trade not via an exchange, they trade over the counter. So something that's important is if you want to work in the preferred marketplace, you want to get exposure to preferreds, you need to work with a money manager or an institution that has the knowledge, scale, and ability to get access, not just to the retail, but to the institutional version. You bring all of this together. We're talking about preferred stock and how it works, what it is, and why you want to consider it. But, given the hybrid nature of preferred securities, given the diversification benefits that it adds to fixed income, if you're an income-oriented investor because you're looking to cash flow your retirement, I don't think there's been a better time than to really take a look at doing some preferreds. But again, work with a professional that's going to get you access not just to the retail, but access to the retail and the institutional marketplace. 833-964-PLAN, 833-964-PLAN, or check us out on the web, getretiredstayretired.com, getretiredstayretired.com. Along a similar line today, I think it's important that people look at something else. A buy right investment strategy. Well, what in the world does that mean? A buy right investment strategy. I think after seeing U.S. equity markets once again drive robust demand that led to larger returns, which means equities now trade at a multiple, that's a PE, a market multiple that's high. I think it's time to reset expectations. I mean, after all, the S&P 500 has absolutely crushed it over the last decade. The question's going to be, what are core U.S. equities going to do over the next decade? And there's a powerful notion in some circles that the returns of the next decade might have been pulled forward by the COVID pandemic rebound. And as a result, we might need to start asking ourselves, is what worked in the past going to work in the future? And there is a different landscape. I think we are going to have a more volatile backdrop. I think it's going to be more relevant to accept that there could be lower highs in exchange for what I call higher lows. And if that happens, it's a lot of market talk. Taking a look at what I call buy right strategies might just help position your portfolio for the potentially challenging landscape to come, by sourcing a greater portion of your total return with income. Because essentially what a buy right strategy is doing is you're taking the underlying investments and you're having the investment manager write covered calls for you. So you own a well-diversified, well-heeled basket of stocks, but you're writing covered calls on that basket of stocks, which generates income. Now, the risk is if the market goes shooting through the roof, there's going to be limited upside on your stocks. But if the market slowly grows from here, you're going to have that capital appreciation at a slower rate, and you're going to have all of the income that can come from it. So I really think if you're looking to cash flow your retirement and you want to start generating a higher form of income, there's two great ways to be doing that in today's environment. Number one, let's go ahead and talk about getting involved in some preferred securities, preferred stock. Number two, outside of preferred securities and preferred stock, I think buy right strategies are going to be a great place to be, especially for those who want to be cash flowing. And when you can cash flow at rates of 7 to 8% per annum, that helps your retirement income in a significant way. So what's our phone number? 833-964-PLAN. That's 833-964-PLAN. Check us out on the web. GetRetiredStayRetired.com. That's GetRetiredStayRetired.com. And what I talk about on the radio all the time is I just want you to have some sincere and actionable ideas that you can use to improve the lives of yourself and your loved ones financially. And what we've done is we've assembled a great team, a team of dedicated professionals. We're all under one roof. You can work with your financial planner. You can work with your investment advisor. You can work with your retiree healthcare expert. You can have access to the estate attorney for that plan you should have drafted that you've never done. You can work with your tax preparer, your CPA, and to have one level, one coordination of care. That's where advice moves from being compartmentalized and reactive to advice becoming proactive. So if you want to get enthusiastic about a holistic view of your family's financial picture, because you want to seize not just the day, you want to seize your tomorrow and get 2025 off to the right foot, well, you know what? We'd love to visit with you because we love working with those who are information junkies, those who love knowledge, because knowledge is empowering. And our job is to be a wonderful financial educator, coach you through your options, and help you with IQ. Not just intelligent quotient, but the other form of IQ that really matters, implementation quotient. That's what it takes. Go check us out on the web. GetRetiredStayRetired.com. That's GetRetiredStayRetired.com.
Okay, Windy City, get ready to be blown away with a hefty gust of more financial know-how, because we're back with In the Know Radio with Craig Bolanos.
I want you to be in the know, and you know what that means? You got to have digital assets in your estate plan. Oh, yeah, I said that. And no one's taking into account digital assets in their estate plan. It's the norm to store your financial records. They're in your smartphone, your computer, the cloud. Heck, people are even facilitating payments digitally. Your photos, your videos, those aren't even printed anymore. They're living in Facebook, Instagram, wherever, and odds are you don't want things like your social media accounts living long past you do. So if you haven't named a digital executor, then I got news. If you don't, you might have an executor because you have an estate plan. But if that estate plan didn't specifically address digital assets, It means you don't have a digital executor. And then you know what's going to happen? Your heirs are going to get locked out of financial accounts. They're going to get frustrated because they're not going to be able to access social media. They're going to be bitter. Yeah, I said bitter because you might have digital photos, videos that become inaccessible. Okay. And here's the thing, passwords. Yeah, I'm going to say this. Passwords like the one on your laptop, you might be able to find someone to bypass it. But others, things that require MFA, multi-factor authentication, dual authentication, data encryption, those are going to be impossible to crack. You're dealing with the data privacy laws. I mean, there are federal data privacy laws that exist now. And I just want to make sure, if you're listening to this show, and I say this all the time, you got people you love and they love you back, then you've got a responsibility to make sure that you're putting people in a position to be successful if you pass away or you get sick and injured. It's advocating for yourself and then advocating for the ones that you might leave behind. And if you haven't specifically addressed digital assets in your estate plan, this is my reminder. While you are surrounded by everything that is good, everything that is great, which is true wealth, it's what money cannot buy and death can never take away. That is your family, your friends, your connections in this world. Make sure you've addressed digital assets in your estate plan, because I don't want you to come up short. If you want some help, we'll help you get that done. Our phone number, 833-964-PLAN, 833-964-PLAN. Connect with me. Connect with our team on the web. GetRetiredStayRetired.com. GetRetiredStayRetired.com. Make it a great week, everybody. We'll see you right back here next Sunday on AM 560, The Answer.